Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 22nd, 2025, and we're diving into Equifax's latest earnings report for the first quarter of 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Equifax has just released their Q1 2025 earnings, and there's a lot to unpack, from revenue growth to strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. Equifax reported a revenue of $1.442 billion for Q1 2025, which is a 4% increase on a reported basis and 5% in local currency. John, what are the key drivers behind this growth?
Equifax's revenue growth was primarily driven by a strong performance in the U.S. mortgage sector, which saw a 7% increase despite a challenging market. Additionally, their Workforce Solutions and USIS segments contributed significantly, with revenue growth of 3% and 7% respectively. The company's focus on new product innovation, leveraging their EFX cloud, also played a crucial role.
And how about profitability?
Net income rose by 7% to $133.1 million, and adjusted EPS increased by 2% to 53 cents. This indicates that Equifax is not only growing its top line, but also managing its costs effectively to improve profitability.
Strategic initiatives and innovations. Equifax has been making strides in its strategic initiatives, particularly with the EFX cloud. Can you tell us more about this, John?
Absolutely. Equifax is nearing completion of its EFX cloud transformation, with over 85% of its revenue now in the cloud. This transition is crucial for accelerating new product innovation, which is evident from their 11% new product vitality index, surpassing their long-term goal of 10%.
They've also announced a significant share repurchase program and a dividend increase. What does this signal to investors?
The $3 billion share repurchase program and a 28% increase in the quarterly dividend to 50 cents per share demonstrate Equifax's strong free cash flow and commitment to returning value to shareholders. It's a positive signal of confidence in their financial health and future prospects.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 11 for Equifax based on a survey of 15 analysts. How did the actual results compare?
Equifax delivered an adjusted EPS of 53 cents, which is 12 cents above the forecast. This beat expectations and highlights the company's ability to navigate market challenges effectively while maintaining strong operational performance.
And what does this mean for investor sentiment?
Beating EPS forecasts generally boosts investor confidence, as it suggests that the company is performing better than anticipated. This could lead to positive market reactions and potentially drive the stock price higher.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. How is Equifax performing in this area?
Equifax reported an operating margin of 16.4% and an adjusted EBITDA margin of 29.3%, both showing slight improvements from the previous year. This indicates effective cost management and operational efficiency.
And what about their outlook for the rest of the year?
Despite the uncertain macroeconomic environment, Equifax is maintaining its full-year guidance, expecting local currency revenue growth of 6% and adjusted EPS of $7.45. They also anticipate generating nearly $900 million in free cash flow, which aligns with their long-term financial framework.
Key takeaways. In summary, Equifax has delivered a strong performance in Q1 2025, with revenue and earnings exceeding expectations. Their strategic initiatives, particularly the EFX cloud, are driving innovation and growth. The new share repurchase program and dividend increase further underscore their financial strength. John, any final thoughts?
Equifax is well-positioned for future growth, with a solid foundation in place. Investors should keep an eye on their continued innovation and market adaptation. It's an exciting time for the company.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Equifax's performance in the comments below. Until next time.